It was always going to be pretty tough for markets to continue to rally higher after two incredible days back to back, up over 5%. The S&P settled back about down 0.19 of 1%, and the Nasdaq was down about a quarter of 1%. So didn't really give back much of the gains on the last couple of days prior to that. And the two industry sectors that have been performing the best this week have actually been the oil sector and the banking sector. In fact, OPEC, the cartel of the major oil producing nations, are threatening to cut production by a couple of million barrels a day. So that saw oil prices up this week. The Aussie dollar, it's settling down and trading around 65 cents. Hasn't moved much in the last day or two. The US 10-year Treasury yield is around 3.7%. It hasn't moved much either. And right now, traders are eyeing off the official US unemployment number on Friday, which is expected to be a little stronger than last month. 280,000 jobs, according to the ADP, were created last month. We'll wait and get the official report on Friday. But right now, the market is continuing to remain reasonably bullish. We haven't had any major new news. The inflation report, the next monthly inflation report out of the US, is due on the 13th of October. So that'll be next Thursday. That'll be really important for the market because, of course, we will then have the Fed monthly statement later on in the month. We want to find out, is the Fed going to slow down the pace of which they're raising interest rates? If they are and inflation is coming down, which I expect it is, we're going to see this market rally continue. And of course, we have company earnings season starting next week with all the banks, and then we'll move into all the technology companies, the big box retailers, and find out how they've been performing in the last 3 months and what do they think about earnings over the course of the next few months ahead. Have a wonderful Thursday wherever you are. I'll see you tomorrow.